I'd like to welcome everyone to the next episode of Unido Talks. My name is Joseph Crow, and I'm here with our two incredible guests. Today, we have Katrina Donaghy, CEO and co-founder of Civic Ledger, as well as all of you know, Michael Swan, our co-founder of Unido. It's so great to have you guys.
Good to be here.
Well, let's dive right in. Katrina, tell us just briefly a little bit about the overview of what Civic Ledger does and what they're set out to accomplish.
So Civic Ledger was founded in late 2016 after we had delivered a very first proof of concept with the Queensland government. So we were quite interested in civic applications on the blockchain technology. We always knew that government issued assets such as license and permits had value. And we wanted to explore how to unlock that value out of paper and start to provide, control and ownership of the data that's associated with those assets back to the person, and then see how they can have a better relationship with interacting with government. That was very early, and then we started going down different avenues and then started looking at real-world assets and how real-world assets could actually be digitized and then created into registries and then into marketplaces. So basically how those digital twins would work.
The application of Civic Ledger is specifically about water rights, and this started in I forget the region. Where did you first roll this out? I know a bit about it, but I'm blanking on what the region is. Northern something.
Yeah, so Northern Australia. So for those few viewers who aren't in Australia, who are outside of Australia, Australia is almost like divided in half. You've got the southern states and then you've got the northern states. But there's so much land up in the northern part of Australia that's now under development. But underpinning that investment and bringing confidence to investment is water security, because we live in an arid country, and if you're going to go mining or growing food or fibre, if you don't actually have access to water, investment is quite risky. So we're working with Northern Australia, the CRC, or the Cooperative Research Centre of Northern Australia, to sort of understand the governance elements necessary to unlock water markets that are actually going to be fair and democratic, and also how we recognise First Nation water, cultural water, and things like that.
With the water rights themselves, I know that you have this set up with the Securities Exchange in Australia, or how did that go about?
Long time ago, for your listeners outside of Australia, the Australian Securities Exchange, or a stock exchange, has been under the journey for the last, I think it's been about 5 years now, to replace their CHESS system with DLT. They don't call it blockchain, it's the distributed ledger technology. So they invested into digital assets, and digital assets have a programming language called DAML, Digital Asset Modeling Language. And they've selected VMware to be their infrastructure layer, but we were quite interested. They came knocking because they were really interested to see how blockchain companies could start using DAML into their stack. And I was sort of talking to them going, well, one of the things that is quite interesting, you guys are an exchange, we're building water markets, what about a water exchange? So we started looking at digital asset modeling language as a part of our stack, because DAML is opaque by design. Of course it is, but even though we work with public ledgers, there's parts of our transactions that have to be opaque, particularly commercial transactions between a buyer and a seller. So we played around with DAML, but that was quite a long time ago, and things have really moved on with the Australian Securities Exchange. They still haven't replaced CHESS, so the team have spun out a commercial arm of DAML because of all the investment into that, and they're sort of playing around as a blockchain as a service, but we haven't really gone back to them, because I think also there's so much more that's going on now as opposed to what was going on in 2018, 2019.
How is the legacy water allocation structure set up in Australia?
Well, have you got 5 hours? No, I'm kidding.
The brief overview.
Brief overview. All right, so this is something that, Michael, you'll understand as well, because you work with your past life. You've probably worked with a lot of registries to hold records, particularly about customer company shareholders and all that sort of stuff, which often always sit on registries. So how water is, it has markets in Australia. We're one of the first ever countries to look at water sharing and using markets to share that water. But what we have is every state government has a registry. Like imagine your land's title, your property title sits on a registry. Same with water, because water is actually a property right. But that registry is closed and it doesn't have any interoperability. But outside that registry are proprietary marketplaces that are run by proprietary private companies, and they don't interact with each other. And the prices are different on how to play on those markets. But what they do is that they have certain pieces of information that the participants of the market require, but they're all disparate and different. So at the moment, you need to go through a broker or one of those platforms to actually trade your temporary allocations or sell your rights, your permanent water rights. And that's really challenging because the data and the control of the water accounts are not in the hands of the irrigator. They're in the hands of these different markets or these different platforms. So there's no trust. So as a result, there's no trust. What we're actually seeing is that our water is not getting allocated to its highest value use. So you've got people that sit outside the market, they're sitting on water, they may not use it, but they rather let it sit there rather than go into markets and actually sell their water for a price, because it's very, very difficult to understand. So water is not a financial product in Australia. So it's not treated as a commodity as what you might see with gold or minerals or things like that. So these marketplaces don't require to have a financial services license. And if you're a water broker, you don't need to have a license to broker water. So we've got this really important asset that everyone on the planet requires to run industries or keep communities alive or have cultural connection. But we actually don't know how much water we have, who's using it, and most importantly, we don't know its price, and therefore we don't know its value. So when we looked at all of this all those years ago, again, what we've done, and I'm sure Michael probably can share some of his own insights, is that we didn't lead with the technology and said, this is a blockchain looking for a problem. What we did is we had to really understand what is the problem, what is the problem to be solved, what are the assumptions and our hypothesis, and then we started to look at what is the best application of a technology to help solve this problem. So our goals were around transparency, removing information asymmetry, and removing opacity. And when you start to look at those through the lines of those design mechanisms, that's when this technology becomes really interesting, because the attributes of the tech can help us solve some of those problems. So it's been quite a journey.
Michael, you're nodding your head. Can you relate being an Australian and the opacity within the system?
Yeah, of course. We are used to different levels of government and interoperability or lack thereof, and the nature of registries. They're typically a closed book that you need to apply to or have an interaction or a right to interact with. There's no there's typically no public reporting on these things, or for people to monitor or have any insights to or be accountable to. But I mean, just coming back from my broader industry experience, water's a really good example here, right? If you look back in any industry, and I'm going to use commodities as an example, year on year, the industry's become and the marketplace has become more efficient through innovative people looking at problems. Now, Katrina's just explained with the water market, is there a more important commodity on the planet? You require water to live, so no, probably oxygen maybe. It's incredibly important. These markets, as she explained, are traded over the counter with proprietary traders. You need to know these people. You need to have proprietary trading contracts with them. You need to have credit lines with them if you buy on credit. It's exceedingly complicated. As you look at, and this is how you used to trade gold, for instance. You used to buy off the major houses if you wanted to hold, and it sits in their vault. They may have put your gold in there, they may not have, you don't know. Then you look to where it is today. It's traded on exchanges. There is a set acceptable price every second, and that fluctuates based on multiple factors. So why shouldn't water be the same? What you need is interoperability between the different marketplaces. So water sits in different maybe it's not movable. You can't move a body of water from Western Australia to northern Queensland, for instance. But there are off-takers that use the product. There is a supply, and there is a government that allocates through rights that supply. Tokenizing that supply makes a lot of sense. Gold is easy to tokenize because you can tokenize it physically by chopping up a kilo into grams. Water, you're not going to sell it in bags. It sits in a body of water. So you need to have the rights, and they need to be tradable. They need to be observable. I'm sure it's not simply, I have a gigalitre of water, I'd like to use that gigalitre. I don't know the industry, but based off what we've just heard from Katrina, it's a little bit more complicated than that. So you need records of who owns things, how they're to be used, when they're to be used. Were they all used, or did it, I don't know, it evaporated? I presume there's a lot of things that need to be recorded to see where the water goes. And this is from someone who's not in the industry. If you look at various different rights, this is, and I'm talking just beyond water, the different opportunities that we have in Australia, let alone the world, to tokenise rights. These are things that people own. The typical operators, let's use water and agriculture for instance, they may be sole traders up in Queensland that need access to water. They are businesses though. These aren't mums and dads, they use the tap in the kitchen. These are businesses. These are business issues, and the ownership of rights. Ownerships of rights are assets on a balance sheet. These are serious matters. It's just as important as plant. And the management, and I'm sure this is a very large overhead to running agricultural business, the access to water, these assets need to be managed properly. Now, if you bring this back to what we talk about Unido, these are material assets to businesses that need to be protected. You need corporate governance around these things, especially when it's more than just a single sole trader. And I suppose this is my focus and what I've been banging on about for weeks. Firstly, you need to solve how we have transparency and tradability in marketplaces for these assets, but then you need to be able to hold the assets. And this is what I'm really fascinated with for the application to corporates. There's more than digital assets than just Bitcoin that is potentially even more intrinsically important to people's businesses. People that need access to water, for instance, as a business
water's pretty important.
They may want to hedge against inflation and have access to Bitcoin, or for whatever reason, or capital appreciation. But I'm sure they want to have access to their number one input to their business processes. Should be treated exactly the same. It's just as important. And as Katrina says, once you have interoperability and these are tradable on par across a fair marketplace, where you don't see a disparity in prices because individual over-the-counter traders have different costs of capital and they assign different prices based on how quickly they move their assets off balance sheet and what the capital cost is per day. You have different prices. As she said, you could call 10 different traders if they're willing to take your call and get quotes. That's insanely inefficient and it's not accessible. You have an open marketplace where you can see what is on the books and what's available to you. You can find a trading price. That's where you get efficiency in markets, and that's where you get the opaqueness, where the transparency, when you can see what a real price is or what a real access to water is. Who cares about what rights are on issue if the over-the-counter traders won't sell them to you? Well, they're not accessible, are they? If they're on market in an order book for an ask, they are accessible at the price line. So these are really important things that you bring efficiency to. And I know we're banging on about water. It's one use case, but it's so incredibly...
It's one use case.
It's so incredibly important to organise a market.
Yeah, and there is a difference between dry water and wet water. So dry water is what your entitlement says you have access, that you have a right to. So when you have a water entitlement or water right, water license or water supply agreement, you own that in perpetuity. So you may be given it, because they have water years in Australia, so water year is like from the 1st of July to the 30th of June, and everything is reset at the start of the water year because of whether we've been in drought or where we've got too much water or we've got hydrology, flow problems. So every year you have to reset the balance sheet and say, if I have an entitlement every year to 100 megalitres of water, but we've been in drought, I'm likely to only get about 60% of my allocation. So this is what happens in South Australia all the time, Michael. That's why they're always banging on about where's our 450,000 megalitre, our 450 number, so we can actually ensure we got that water coming downstream. So there's a difference between dry water and wet water. So dry water is what your papers say you have, and wet water is what you take. But the challenge is that there's more dry water out there than wet water. So we basically extract more than we actually can. And that's what the problem is with California, is that there's more dry water than there is wet water. So the challenge is that if you have more dry water and then all of a sudden you say you can extract, you're actually over extracting, and that's called exceeding the sustainable yield. And that's when we start to have environmental flow problems. That's when we start having biodiversity problems, and that's when we start having scarcity problems and things like that, pollution, various other social and economic ramifications, because we don't know how to manage water effectively, because we've been running it in disparate systems, paper-based systems, Excel spreadsheets, multiple actors that have a vested interest in what that information is. But it is challenging because, like all industries across the planet, traditional industries, to go through a digital transformation, and I say digital transformation in a way that is not saying this is about blockchain and you've got to use blockchain to go through digital transformation. It's everything, because it's about business models and governance. It's about how do you actually design your business to interoperate in your supply chain. And that requires you to rethink your business model, your processes, but importantly, how you start introducing the concepts of second layer of governance. Because first layer of governance is all that external stuff like legislation, regulation, schemes, water plans, operational plans and things like that, that govern on how water is to be accounted for, who gets it. But then you've got the second layer, such as access, information, consensus, privacy, security. So privacy of data, consent in the data, ownership of data, control of data. That's what a second layer of governance comes into play, and that's where we play. We can codify all the external rules because we can read them and understand them, but then we introduce second layers of governance into the market where it's actually built from the bottom up. And that comes down to the need to have consensus and collaboration with the person that you're solving the problem for. Not actually sitting from the point of view of the regulator and say, we need to be compliant to the legislation. It's more about how do you actually ensure that the actors who have the problem can be better in control of these assets, because they know how to use them. They know exactly how water is to be valued and how to be used, but the markets, everything is done to them, and they're shut out of certain pieces of information. And it's hard to imagine that when you think that everything underpins every economy on the planet is underpinned by water or biodiversity or nature markets. Yet we just don't seem to understand its value. And we're very interested in, through these processes of revealing the value of these assets in value chains, in supply chains, in governance, so we can better understand how to stewardship these assets in a way that's not going to create an ecological disaster. Because we know water's a human right, we've got to protect it as a human right, but we've also got to understand that it is an economic driver as well.
Yeah, it's really interesting.
So we haven't talked really about blockchain yet, have we?
Well, and I suppose that's the point, though, isn't it? We haven't talked about the technology of blockchain. We're talking about real-world issues and how we're solving them through tokenization and other methods. The application of blockchain is a convenient use of something that is open and observable. But you're right, our conversations have been targeted on real-world problems because the reality is you've made a business out of solving real-world problems. And I would suggest to you it just so happened that blockchain was the right solution, rather than you were a blockchain nut and you went out to find where can I apply it.
Absolutely, because we knew back in 2008, 2009 in Australia, there was a push by the Australian government back then to actually join up all those registries. And because we didn't have technology like we have today, it was almost like taking CRMs and customer relationship management software and trying to stick it all together. And that ended up costing $56 million before it got abandoned. Because what we know in Australia, and probably like the US too, is that even though we have a federal government, we have a state governments don't like to talk to each other. They like to do it their own way. So they have different names of things. So even though you have the same legislation, when they have to adopt the legislation to their own states, what maybe we understand as a water entitlement could be called something different in a different state. So this is where data structure becomes really important to understand. What do you mean by that word, and how does it mean, and where does it need to go, and is it associated with a transaction? What's its data structure? So it wasn't until we got this technology that we could start to look at the problem, but through different eyes, because the problem's always been there. We just haven't been able to solve it. And I think the thing about this technology layer is that it actually is not owned by anybody. And that's very important when you have a shared public resource such as water, which, as Mark Twain said in 1853 or whatever it was, whiskey's for drinking, water is for fighting for. So we will know, we have already seen it globally, that wars are happened because of water scarcity, because there's a vested interest. So we use this technology on the premise that we don't own it, so therefore everybody owns it who's participating in the market. And that's very important. It's very key.
How has the pilot program gone in Australia since you started it? And was it 2018?
Yeah, so we did the first pilot. We looked at all of our assumptions, all of our smart contracts, and all that sort of stuff. We actually trialled them in 2020 up in far north Queensland. And what we wanted to do is validate our assumptions that we could actually take something that is very complicated and start looking at automation, contracts, and blockchain technology to smooth out those frictions. And we proved that we could. So we tested ourselves. We didn't go in there and go, we're drinking the Kool-Aid, everybody. We really had to hold ourselves accountable and be very, very honest and have those hard conversations. What we couldn't solve was the interoperability between the market and the delivery infrastructure. So when we talk about delivery infrastructure for your listeners, that's like where the water is stored and how the water moves. So there's either a pipe or a channel, an open channel, surface water, groundwater. There's no interoperability between any meters. So there's no sensors, there's no IoT. There are meters, but they're analog. And you don't have those data points to actually listen for to see the state of change of transactions, such as how much water is being extracted out of the system. But that's not our problem to solve. And that's the other thing too, is that we're not, like problems all around the world, whether you're looking at water or you're looking at supply chains, whatever, it's a shared problem. And not one person can solve it. It's like carbon markets and biodiversity and all those sort of things. You've got to know what is the part of the problem that you can solve, but you need to cooperate with others that have also the ability to solve other parts of the value chain. So that was the only thing, is that because all of this infrastructure, which costs billions of dollars, is not in a digital twin state. So we can't read any data from it. But now, I can't say it now because we're actually in media releaser modes at the moment, but we've just started a deploying Water Ledger into markets right now. So we're back at the start with all of our assumptions and all our feasibility and our research and all that sort of stuff. Everything's been validated, and now we're going into a very conservative world, and we're taking them to the world of blockchain. And we're just finalising our media releases at the moment. So this is huge, because it means that, like Michael was saying around the corporate world, is that it is a challenge because they have to come from the position of risk, but we're asking them to start to shift to principles. So when we talk about risk, it's all about, well, this can go wrong and that can go wrong and it's going to end up in the news and it's going to be this and it's reputation, da-da-da. And you go, well, how about if you move to principle-based risk management, where you think about what are the principles that we need to be thinking about design, and things about security and privacy and consensus and access and democracy and blah, 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 blah. How does that then de-risk reputation? Because all of a sudden you're actually bringing a public window to how you do your work, how we can agree on how much water's in the system, what the accounts look like, that everyone's doing the right thing. And I think what we talk about is about instilling a design into the solution whereby it is assumed just enough that everybody is acting honestly. And when you start to get positions such as that, where behaviour shifts to the likelihood that everyone's an honest actor, that's when we start to get that distributed trust into the market, and we start to see much more efficiencies coming through. So it's not a process, and I'm sure, Michael, you've been through this as well. It's not just saying, here's a blockchain, shove a problem into it because it'll solve it, because it's more about humans. we need to ensure that it's a human-led solution design approach. So you need to find leaders, and that's the challenge. You've got to find leaders who are willing to stand up and say, you know what, this is not working. We have to start thinking differently. And I know we don't know where it's going to go, but we've got to start having those conversations, because it's not about the organisation. It's not, because when organisations look for efficiency internally, they're thinking about themselves and not the industry or the customers that they're actually interacting with, or the customers in the industry interacting with them. And every time they make a change, the costs are borne by the industry or the customers. So all of a sudden you can't interact with them anymore. So that's why when people ask me, they go, what's your technical background, Katrina? I'm going, well, I'm a sociologist. And they go, well, what's that got to do with blockchain? And I go, well, when you really think about blockchain technology, it's a governance technology that allows us to rethink the way we share value with each other. And it redesigns economic and social systems. And really at the heart of that, humans.
Hearing everything you've said and the hesitancy around blockchain because it's new, I totally agree with the attitude. Don't make it about pushing something that's new and exciting. Talk about a potential solution to problems. Now, if we don't solve the water, we keep coming back to water, but it's a really good example. If you don't solve the water issue, I'm not talking about 3 years' time. What about in generations' time? When we have states at war with each other over water, for instance, because it wasn't managed efficiently. These are real issues. And if you look at ways of solving real issues, it does take a bit of bravery. It takes a bit of innovation. There is a technology which has been around for over 12 years now in certain iterations that solves the transparency issue that you've talked about. People arguing about water rights and who got what and how many were issued. Wouldn't it be great if you could look at what transactions on a ledger and go, it was 400 gigalitres. I don't even know the quantums that are appropriate for the example, but it was 400. And it was given to wallets. It was given to the various wallet holders the rights. 400 million gigalitres maybe. And it was divided up, and that's a very simple thing you can put on a spreadsheet and you can audit, were the rights distributed or were they not? So blockchain is a good solution to a real world problem. And what we need is a bit of vision about how to solve these real world problems. And if we accept that we have a publicly accessible ledgers, that this is a reasonably well-tested technology, but it's not a mainstream technology yet. Yes, there is a newness and a scariness about accepting new technology. But I remember when I had the internet and it was a dial-up modem, and I thought, this is insane. This is, apart from ICQ, what am I going to do with this? And I was a bit cynical too. Now, I'd like to see me survive 3 days without internet. I'd go insane. It takes a bit of looking to the future. Now, we have a technology that solves, and we're talking about water, but there's so many different rights. There's so many industrial uses. You can tokenize a real estate building these days. There's so many ways of distributing efficiently and transparently rights or ownership deeds over assets. These things need to be managed, but we need willingness and we need the infrastructure now. Because what are we going to wait for 30 years when this is a critical political issue to solve and we try and solve it? Or do we work early? Which means we need corporates understanding the issue, but also the infrastructure. Now, everyone knows where I work and why I'm saying this. Corporates have corporate governance issues, and they need to be ready to hold digital assets, whether it's tokenized assets, hard world tokenized assets, whether it's rights. These things are going to become more and more relevant to corporates as we progress, which is the point of these of Unido talks, to educate what blockchain can solve, and to encourage corporates that get ahead of the issue. Don't wait until you're asking for ADSL and it takes a million years to get connected. Go and buy your dial-up modem and get your heads around what the internet is, because I put up with those things and I'd like to think I'm fairly internet savvy. People getting in late, don't miss the boat. There is such incredible use cases for blockchain, and Katrina's talked about one. I'm sure we could pick off the top of the head, she'd have 10 to fire off.
But one of the things we just finished working on, and I'm just doing the final report, is that we were a part of the $3 million blockchain pilot grant that was looking at critical minerals. So Ledger, who is owned by Leanne Camp, who used to be the Queensland entrepreneur, but Leanne has a company called Ledger, looked at diamonds in the first instance back in 2015. So we've just rolled off that project, the technology build. Now we're doing all of our final reporting, but what we had to look at was the problem that we needed to solve for the critical minerals industry. So for your listeners, critical minerals are those rare earth minerals like lithium and nickel and cobalt that will actually create or fuel the low carbon or the zero carbon economy through EVs, batteries and things like that. That are going to be essential for us to transition into low energy carbon economies. So Australia sits on quite an abundance of rare earth, but what the critical minerals industry wants to do is prove its sustainability credentials. So because it's going to be quite a competitive market, Australia wants to ensure that they're getting the highest yield in global markets, and to do that they have to start understanding how they disclose their ethical credentials as they actually are going through the mining process. So for us in Australia, we remember, I think it was 2 years ago when Rio Tinto blew up the cultural significant caves over in Perth, over in WA. Now that is something that was, quite horrendous. But again, people might hear of it, but they won't actually know if any of the minerals associated with Rio Tinto are anything that they're actually using now. And if they have a moral objection to Rio Tinto as a company because of what they did, they won't be able to see any visibility in any of the products that they get that there's a Rio Tinto tinge to what they've got. So this is about bringing that level of transparency, because in the US and in Europe, any companies that are exporting to the US or Europe, you need to show your sustainability credentials. So we're talking about environmental sustainability, social good, governance. And we have standards globally under the Global Reporting Initiative that actually guide us those standards, which inform frameworks, and those frameworks are then informed by legislation, and then those legislations we're able to codify. So we've done the water accounting piece, whereby we've done all of the water accounting rules and things like that, do our little job, get the raw data from Ledger, process it, ensure that it hasn't been manipulated on the way through, and send the data back, and it actually then is presented into a badge that's on the critical minerals credential, and you're able to then, the manufacturer in the upstream supply chain is able to source that information to know that the rare earth that they're actually going to buy from Australia has not been any way nefarious. And that means that data can pass on to the manufacturing process, which then can be passed on to the consumer. So the critical minerals industry understand that, but we're not talking about the technology, we're talking about the ability and empowering them to showcase or tell their story that they're actually doing things the right way. And that's what is important, the ability to empower industries to tell their story in a way that is understood by everybody.
That's good.
It's important though. It's the same thing with conflict diamonds, right? The diamond industry in general. You buy from De Beers, and De Beers make an understanding they don't come from Sierra Leone. There's other places. But where do they buy from really? Well, private contracts that sit in a locked cabinet for them. Wouldn't it be great to know the mining on the field who certified when they handed over and originated a contract that this came from a field in, Tanzania or wherever they're sourced from, given to De Beers. De Beers sold to a jeweler wholesaler, and you can map all that back. It's the same sort of thing, understanding the source of a product and tracking it through, and not believing someone said they got it from somewhere, because this is becoming more and more relevant. And there are so many examples. And the interesting thing, of course, is, and I keep banging on about it, this is going to be a right or a certification. Well, how do you manage these things? How do you sign on behalf of a producer in the field? Is someone going to have a thumb drive that they hand over to someone else when the shift ends and they transfer the signing rights? No, of course not. It's a corporation. There's got to be process, which is what, of course, we're all about at Unido. But solving these wealth transfer in of itself type problems, or payment facilitation, but tracking even the secondary relevance to products. You've seen the NFT uses of legitimacy of expensive jackets, for instance, right? You're buying a jacket, but the NFT is intrinsic to why you pay the price. VIN numbers on cars could be an NFT in Australia. I hate registration papers. I would love the ownership of my car to be in my wallet, and when I sell it, I transfer the NFT. They will come to fruition.
They will come to fruition, but I think it's a collective effort. It just can't, as I said, it's not about one company standing up and saying, look at me, I'm a blockchain company, I can solve the whole world's problems. Yep. It doesn't work that way, because we still have to intersect with regulation. We still have to intersect with law, and we still have to intersect with consumer confidence. Those things are not something that you can just program into code and all of a sudden it's done. It's a cooperative technology, and it requires us to shift from competition to cooperation, but also then agree on how we actually share value and what that actually means. And don't forget, the blockchain's there to hold the transaction, an audit log, a log of events, or things that actually we can actually then agree that something has happened. It's not the full stack, and it's
no, absolutely not.
It's all of those things. Sometimes we have to just calm ourselves down and say, well, where is it? Because we still want to use other technologies in the stack, like artificial intelligence, particularly machine learning. Like once we start getting more depth of data across our marketplaces and volume, we want to look at derivatives. So how do we actually start to understand behavior? How do we nudge to ensure people are optimizing their allocation? So we're getting this, choice value. There is so much more to this, but again, does it still feel after all these years that we're on the ground floor? Have we left the ground floor yet? Are we in the lift going up to level 20 yet?
We're in the lift.
We're in the lift. At least we're in the lift. That's right. We're just pressing buttons now.
We are. We haven't got the swipe card. But look, your example's very interesting. And I go back to your example about water. And the reality is the gating meters are analog. Now, you can see as this progresses and these technologies get accepted, there's a very obvious Internet of Things application, right? The same as home power grids now, feedback. You can see a future where it's a digital gate and it has a signing right, and it will say each time a gigalitre goes through, it marks off on a digital contract and signs on behalf of the gate. I can see a future doing that, but that's not just you guys. Of course, there's so many providers, and we need to get people on the same page.
Because it's data as well, as we understand that data is a liability, so you've got to be thinking lean data, lean. But we also have to be thinking of cybersecurity, because water and our technology blockchain is considered as, what is considered as a critical asset, but also critical infrastructure, but also blockchain is considered as a critical technology. So when we're dealing with these publicly shared resources that everybody has an interest in, we have to also think about security, because of what we've seen in the US, particularly around the hacks, the ransomware around water utilities and things like that, things that are of great value to public. What we share as public will become even more interesting when somebody wants to take all the control of that, or hold people to ransom, particularly utilities, when we're talking about quality, water quality, ensuring that water does not do harm to communities. So we've got to think about all those other pieces too, but this is why you need to be thinking multilateral, multidisciplinary, because this is bigger than just our little industry, so to speak.
The interesting thing is there's two parts of your problem. There is the infrastructure, and then there's the people who are involved, the marketplace, the market makers, and the off-takers. And I guess the takeaway from a blockchain perspective, if it's just water, those folks that aren't involved in laying out the infrastructure but intend on using the rights, to get people motivated to think about how does blockchain apply? How do I hold my rights? What do I do with them? How would I market them differently if there was a universal marketplace? These are the exciting things that I'd encourage corporates to think about these days, because that's the direct application. How they solve the gating issues, you're right, because there's multiple vendors, there's multiple considerations, But just getting people thinking about, instead of paper trading, getting onto a digitised universal system. How do I think about that now instead of 5 years when there's a cut-off from analogue phones to digital phones? That's what I'd love to get people thinking about. Don't wait for the cut-off. Get ahead of the curve. Start thinking about these solutions now.
I think, and the last thing is really don't wait for government to actually set the scene to make this happen. Like, there's always, like, when we first started all those years ago, I came out of government, so I spent many years as a bureaucrat. So, that was my thinking when I came out and, created Civic Ledger, because Civic Ledger was the premise. I mean, it was literal back then because it was so early that we thought it'd be clever to create a business name that had ledger in it. But Civic was the whole idea, is that we wanted to sort of re-examine the relationship between citizens, industry and government in the digitized economy. Obviously, we've learned a lot since then about what that actually means, but it really has to be industry-led. It has to be sector-led, ecosystem-led, because you can't wait for government to turn around, we're going to change the regulation, or we're going to fix it for you. You have to be thinking, how does an ecosystem do we need to shift? And it's about what you're saying, Michael. It's around the leadership, the thinking, the strategy, the delivery, and needing to know we need to change. And then looking at the tools and saying, how do we think about the tools? Where are they applicable? Where are they not? So, I mean, on Tuesday, I'm flying to the middle of New South Wales to keynote at a water brokers conference. A water brokers conference. That's like saying, I'm going into the heart of intermediary. You're going into the world to which you are disrupting, and you're going to be standing in front of them, right in the middle of New South Wales. These are irrigators and water brokers, and going, let's talk about blockchain. And I find it fascinating, because if this was 2 years ago and somebody said go speak to a water brokers conference, I'd be like, they don't want to hear about it. But now they do. But it's not about saying this technology is going to wipe you out. It's about saying how this technology will make the system better and fairer, and you will be able to make more money, because the counterparty risk is going to be removed between you and the buyer and the seller. So it's actually caching the conversation in a world that they understand, rather than coming in and going, I sound smart because I'm going to say the word blockchain 50 times, and you might actually eventually believe me. You just got to know who you're speaking to and why you want them on your side, because you get them on the side. It's like the early days, and I don't want to go down a different rabbit hole, but Michael, why did VHS stump beta? You remember the video? Why did VHS become the dominant instead of beta? It was the adult industry that actually realized that they could actually distribute content without the big guys. So they were able to actually create adult content and record the adult content onto VHS and then distribute it around the world without asking for a license agreement with a big company like Sony or a big movie company. They were able to produce adult entertainment, put it onto VHS and distribute it around the world. So guess what? Everybody had to have a VHS video player to play the content. So it's those type of analogies that we have to remember, is that if you solve the problem for the people who have the problem, they're going to be the ones that will be the adopters. And they will become your customers, because they will tell their people, and the new people will become your customers. So you've got to, I know that's probably not the best analogy, but it's that's why Yahoo became huge, because they indexed the internet, and then obviously we now know where they are now. But it is about how things change when you get a network effect. But you've got to it's all about timing. It's always about the sweetness of timing.
You'll get a good reception with everyone that you go to see on Tuesday, because you're solving an issue, not telling them why they're wrong. You're solving a very pertinent issue, and that's why there is a reception.
You have to be extremely respectful, and that's really important, Michael, is that you just can't come in there and throw a white paper on the table and go, I'm smarter than you guys. You have to be absolutely respectful. And empathetic, and listen. You listen and say, hey, what's your pain points? Let's talk about that.
That's it.
And then show. You
That's
don't
it.
just tell and say, hey, we're going to do this to you. It's about how can we all win? How can we all participate in this where we actually create a fairer system? Because if we don't move, as you were talking about, it's, around the whole crypto industry, we're just waiting for the regulation to come. It's also happening in the water industry because we've had inquiries. And because the water brokers aren't regulated, they aren't licensed, they know it's coming. So it's a case of how do you get ahead of the curve and create a system where it's compliant and self-regulatory and got those audit logs, so you're not having the burden of compliance done to you.
Yeah. Look, it's a very interesting story, isn't it? It's a very interesting story. And as I've said, and all I ever bang on about is there's so much more to blockchain than cryptocurrency. And if you look forward in 10 years' time, I'll put my house on anyone who wants to take the bet up that this is going to be across multiple industries, and all the things now that get written down in a private registry of who owns what. A very significant percentage of those industries and how they record the trading of things or the movement of assets or the movement of commodities are going to be blockchain. And it's a matter of time, and you can wait until it happens and then you can speed up, or you can investigate this stuff now, which is why, frankly, I love Civic Ledger, and I've been a big fan because, again, you're solving a problem, not saying you guys should look at blockchain, because that's a terrible attitude. That's just a vendor saying, come buy my stuff. If you take the attitude of we're going to solve a problem and we've found the best technology to do it and it just happened to be blockchain, that's fantastic for the industry. So well done, Katrina. We're very proud of you in Australia.
Well done, Katrina. We're very proud of you in Australia.
Joe, you've been trying to intervene between Michael and I rambling on.
This has been an incredible conversation, and time has been, we've already been here for almost an hour. I just want to make sure that I'm respectful of you guys' time. This has been awesome. This has been so awesome. And I hope that our viewers have learned quite a bit.
I know we're finishing up, but Michael, this is why, and in Australia and also in Canada and in the US where we have First Nation people, Indigenous people, we took all of those rights away from them. So the legal instruments don't recognise them as a right.
Yes.
And this is the thing, is that we as because they're the custodians of the countries that we're blessed to live in, but we sort of like look at ourselves and go, what do you mean I can't use water? I'm going to go and protest. And you kind of go, First Nation people are sitting there going, we had no say, and you just took it away. So this is why getting the balance back in Northern Australia is so important. That recognising First Nation right to water is one of the most important fundamental conversations we need to have in our country, because cultural value, economic value is so intricately linked, and prosperity and health and well-being.
Yes.
So it's a much broader conversation, and I know we're sort of taking up our time, but look, I just want to say, Joe, thank you so much for the questions, and Michael, for a great conversation. Why have we not connected before?
Doesn't make sense, does it? When you're in Sydney, let's find a slot. I'll come into the city and say hello. There is a joint effort needed to really ram this home.
Thank you so much for joining us for this podcast. Be sure to follow Katrina down below in the description. You can find her LinkedIn and Twitter, as well as Michael's. Thank you. Have a great day, everybody.